Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is approaching and testing a quite significant monthly demand and support area. In fact, from here, all this previous rejection to the upside was created. Again here, the market tested its zone and rejected it to the upside. Again here, tested and rejected. Again here. And at the moment, the market has approached this exactly same zone, from which there is a possibility to see the market create a potential reversal to the upside away from this area, as already happened in the past every time that the market tested this zone. We can also notice how, from a pattern standpoint, in approaching this area, the market has also printed this M pattern. And in general, after the creation of an M pattern, as explained many times, there is a high probability of seeing a reversal higher for the completion of the pattern at the neckline, which is the previous support turned resistance. So here on the monthly, everything is pointing for a potential reversal higher away from this zone. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see a very strong impulse to the downside without any kind of deep correction. Now, generally speaking, when you see a strong move in the market, you would always expect a correction because that is what creates a trend by definition, a series of lower lows and lower highs. Now, in this case, we just got a massive impulse without any healthy correction. Therefore, this market seems overextended to the downside, and that increases the probabilities of a potential reversal higher away from the zone. If we look closer, we can also see how the market has already created one rejection away from this zone. And at the moment, the market is approaching that exact same support area, from which, again, there is a possibility to see a reversal higher, potentially creating a double bottom at this zone. So also the weekly seems quite bullish. Now, if we drop down on the daily time frame, what do we have? Now here on the daily time frame, things are looking quite good for a potential reversal higher because, as we have previously identified, all this blue box here, this is the support that we have on the monthly time frame. And here on the daily, we are going and testing that area with the creation of a bullish pattern from a daily perspective. In fact, we can see how the market is currently creating this M pattern, which is a bullish pattern, after which we could expect a reversal higher away from the zone at that point, potentially also completing the monthly M pattern that we have previously identified at the beginning of the video, and also rejecting the monthly support that we have identified at the beginning of the video. Now, if we go and see what we have when it comes to the commitment of traders, which is essentially the COT data, so what the non-commercials, so the biggest speculators in the market are doing, so hedge funds, what we can see here is that with the last reports, we have seen actually a decrease of the net positioning. We went from 59k to minus 10k net positions. So institutions have been moving to the bearish side of the pound lately with the last reports, and that is perfectly understandable because we could already expect that, considering that the price has been pushing lower. So essentially, institutions have been shorting all the way during this move to the downside. However, now they have started taking profits at this support. Now, how do we know that? Because we can see how with the last report we have a minus 4,200 short positions, while with all the previous reports, we can see tens of thousands of shorts getting added. So now the profit taking on those shorts has started. This means that as the profit taking will end, there will be also a time where we will start to see accumulation of longs, and that would definitely increase the probabilities of a potential reversal higher away from the zone. So I'm definitely looking forward to seeing some institutional longing inside of the zone. Now, if that will be the case, if we will start to see institutional longing inside of this support, how we could be approaching this potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher for the market to complete this daily M pattern and also potentially complete the monthly M pattern, rejecting the monthly support. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that at the moment the time to join with this current special promotion is starting to run out, so I really suggest to go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.